It's interesting because we have about 1,200 members, just under, who were great entrepreneurs and now are wealth preservers. Just in the last 2 quarters, public equities has become our largest category. That's never happened before. Typically, real estate has been our largest holding. And part of it is just for the reasons you're saying. And part of it is that with the fall in the markets up till now, they see some real bargains and the liquidity. That's a double benefit. So our members are obviously liking public equities. It's never been our number one category. It is now.
Fascinating. And where within equities do they see value? I know many investors are feeling left out of the rally, but are still finding it hard to justify getting in at these levels.
So, our members have learned that stock picking is not their focus. So it's a lot of ETFs and indexes. Those have been growing over years. But in terms of sectors, historically, technology, you have a lot of the FANGs that have come in from much higher prices. They're thinking there's a lot of benefit there. And of course, one of the big areas is energy, not only on the oil and gas side, but a much bigger interest, growing interest in renewables and how to play the solar opportunities, the wind opportunities. They know this is the biggest theme, investment theme that perhaps in human history, and it's getting a lot of their attention.
Interesting. A lot of the risk takers we speak to are telling us that they are sitting on higher than usual cash piles right now because of concerns about where the general economy is headed. How is that also being echoed with some of the members of Tiger 21? And how would you say their cash piles are relative to recent times in history?
So over the last decade, our cash, remember, these are entrepreneurs and they learn from one another, they meet in meetings, so they tend to follow one another. It's held pretty constant around 12%. And the reason why 12% is so amazing, first of all, historically it would be like 5%, but it has two different meanings. One is our members live on about 2% of their net worth. Remember, they're wealth preservers and they've already sold their business. So that's about 5 years of living expenses to weather any storm. They know they don't want to have to liquidate at the wrong time, but they also want resources to pounce on an opportunity. And they've been seeing them in increasing numbers. So our cash actually just ticked down from 12 to 11%. It may sound like a small amount, but it probably suggests that members are quite bullish over the long term. They have recession fears. A majority of our members think we're going into recession, and still between real estate, public equity, and private equity, it's a 76% allocation. So that's pretty confident in the long term.